What's going on? Welcome back to Trending Stocks. Today we're going to talk to you about Virgin Galactic. I want to go over some of the current data points, break it down on what's really been driving Virgin higher, and then aside from that, a lot of people are starting to chatter about Virgin being the next big squeeze play. I want to go over if that's feasible or not. Before we get into any of that, make sure you guys hit that thumbs up, and with that, let's get right to it. So starting off on Friday, it did go up a pretty impressive 10.86%, 678 the low, 748 the high. So a lot of volatility and 2.4 million shares being traded, 2.9 is the average. Regrettably, a lot of the volume was done by algorithmic trading and shorts. That's been the case for a while because you can kind of see right here, there's been no real transactions above $100,000 occurring on the secondary market in the last 90 days. So last ones were on July the 12th, so obviously nothing recent. So in general, it kind of does suck. The fact that Virgin has gone down so much, as you can kind of see right here. So over the last 1 year, down 90.45. But despite that, though, institutions aren't really getting in for the long haul. So once again, not necessarily the best, but there has been a lot of optimism in the broader market that Virgin has been somewhat piggybacking off of and what algorithmic trading has been really representing because of good old PCE and also GDP and CPI, I think like a week and a half ago, all of which are signaling for rate cuts to be coming. And that would be huge for growth stocks such as Virgin. So for the September 18th meeting, there is now a 11.9% likelihood of a 50 basis point cut. And then aside from that, a 87.7% likelihood of a 25 basis point cut. So in general, that's very good for the broader market. And that's not even counting the November 7th meeting. So even the November 7th meeting is showing another 25 basis point is going to be coming. So all in all, I think that is generally good stuff. As far as from the company itself, the only news that came out recently was on July the 24th, and that was them announcing their earnings. So it is slated for August the 7th during the market. $4.80 loss is the estimate for the earnings per share, and 3.34 million for the revenue. And over the last 90 days, 4 positive revisions and 1 negative. Still though, that's not really been one of the driving factors for Virgin, although in the past this has been a nice surprise squeeze or surprise that has really prompted a nice run up in the stock price. That was, I believe, in Q3 2023, but still beside the point, we'll just have to wait and see. In reality, when it comes down to Virgin, it is at all-time high short interest numbers. Currently 32.02% of the free float is being shorted, works out to be 6.05 million shares. Friday shorts did return about 165,000 shares, utilization 64.33, and then short score, so the higher the number, the higher the likelihood of a squeeze happening, is 78.17. And this is single-handedly why people are talking about a squeeze, because shorts have doubled the hell down ever since July the 18th, a low of about 26% to where it is now at, I think it did have a high of 33.2. Right now it's sitting at 32.02. So this is why, again, people are saying that Virgin is a squeeze play because shorts are overextended, very much doubling down on Virgin's recent reverse stock split, which, in case you do not know, did occur right over here on June the 17th, a 1-for-20. So not necessarily the best, but because of the recent price action with Virgin, so you can kind of see right here the overall negative downtrend, it did bounce on the 19th off of this S1. So it was more of a technical reversal, if that kind of makes sense. So the low, it kind of bounced off this S1, so we know going forward that this is a diamond support. Right now with it at 745, it is trading between this pivot and this R1, so 6.99 is going to be the next strong support, and then $7.78 is going to be the next strong resistance / target. So all in all, this is single-handedly why Virgin did go up. It is because of the technicals, and nothing wrong with that, right? Whenever a strong support or resistance, it kind of works both ways, is tested, then you do see a recovery. But one thing that I think has really not prompted shorts to return is it's been missing out on a surprise catalyst. So if the company right now, given the momentum that's happening with the technicals, if the company puts out a good substantial catalyst, or possibly even just raises guidance for the foreseeable future, then in reality, that could be that catalyst that shorts obviously prompt shorts to return some shares. So all in all, I think that is pretty good. So yes, it could be a squeeze play, just it's missing out on one key thing, right? Because short score, that number basically is comprised by utilization, number of shares being shorted, cost to borrow, and everything like that. So this is a key number, but the only thing that really divides this number and actual squeeze is a catalyst. So once again, hopefully the company does put out some substantial pieces of news as of late, but looking at options from Friday, 428,000 in calls, 81,000 in puts. Sentiment wise, 64% of all the options that was done on Friday were optimistic and bullish. And looking at the call options that were purchased, you do see a consensus for it to be above $8 by the end of next week. And then obviously encumbering their earnings, you do see a consensus as high as 12. So a very nice recovery. I don't know if that's feasible or not, but then looking at puts, you do see a consensus for it to be sub 650 by the end of next week. So more of a continuation of this downtrend. So all in all, a lot of volatility is going to be coming in the foreseeable future, and you can tell that just based on the wide gaps on the fib levels. So yeah, right now, I definitely do agree with a lot of people out there that's kind of chattering about how Virgin is a squeeze play. Being at all-time high short interest numbers is kind of crazy, on the verge of possibly back-to-back rate cuts, and this is where you could see a very big market rotation. So I've brought this up in various videos, but what I mean by that is you can kind of see that we're at all-time highs numbers for big money sitting in money markets. So it's roughly around $6 trillion. If we do have back-to-back rate cuts, then this is where you'll see a lot of rotation, money kind of moving from money markets to equities, causing a lot of stocks to go higher, similar to what happened in 2020 to 2021 right here. So I think people have just been patiently waiting to feel comfortable that the market is not going to have a crazy recession and that things are going to be moving up, and the back-to-back rate cuts is going to be that kind of transition point. So that might also really stand to benefit Virgin, and that could also be that driving factor causing a squeeze. So let me know your thoughts on Virgin. Have you been buying? Have you been selling? What have you been doing with Virgin? And do you think for their upcoming earnings, they are going to beat, miss? What's your kind of viewpoint on all of that? Don't forget to hit that thumbs up. And one final thing, take advantage of this promo. Simply sign up for a new account, throw $100 at it, and they give you 5 free stocks. Each stock is valued up to $2,000. Link in the description below and also the comments. With all that said, appreciate all of you watching.